This episode is sponsored by the HBAR Foundation and Bullish. Stay tuned for more information about both of them later in the episode. What's up, everybody? I'm Scott Melker, and this is the Wolf of All Streets podcast, where twice a week I talk to your favorite personalities from the worlds of Bitcoin trading, finance, music, art, politics, sports, basically anyone with a good story to tell. Now, one thing people don't talk about very often is that the success of a cryptocurrency and many companies is really based on one specific thing, and that is the community, right? We like to think that we're in it for the tech or for the price, but generally it's that strong community that drives the price of a cryptocurrency, drives the success of a coin or a company. Well, today I have a guest who's a master at building those communities. He's worked with companies like TikTok, WeWork, Reddit, NASCAR, FedEx, and now is focused largely on Web3. We're lucky to have him here, I would say. Greg Isenberg, welcome to the show. I can't wait to talk about Web3 and community building with you.
Thanks for having me, man. And wow, what an intro.
Yeah, well, it's true though, right? And I don't know how you originally got into it, but it feels to me like, especially now as NFTs and Web3 are starting to become more popular, it's really how many people are excited about it and feel that, you know, inherent draw towards the project that really drives the success. Would you say that's true?
Oh, 100%. And when I look at actually like some of the most successful Web3 entrepreneurs, it's interesting to see how nerdy they are, if you think about it. Like these are the kids who are killing it in RuneScape, you know, crushing it in World of Warcraft, into like the weirdest stuff. And because they learned those dynamics of like niche communities, you know, they're kind of equipped. They're the best equipped. The people who are best equipped for Web3 are the nerds who are spending a lot of time playing video games.
Oh, it's Revenge of the Nerds in real life.
Yeah,
movie
exactly.
from our childhood. So why are they then able? I mean, what is it about the experience of playing those video games that makes them so adept at building these communities?
Well, I think it's a few things. So it's the dynamics around earning digital assets, buying and selling. I actually used to. I don't even talk about this publicly, but I actually used to play professional Counter-Strike.
Wow.
As a kid, and Counter-Strike, for those of you listening, I'm sure a bunch of you have played. You basically, is this 5 versus 5 game. You earn skins that you can customize your skins. There were, you know, secondary marketplaces where people were earning these skins and buying and selling it. And the entire ecosystem from the professional standpoint was based on a protocol called IRC, which is basically a precursor to Discord. So if you think about it, it sounds pretty similar to how certainly the NFT and DAO community space works. You have buying and selling and trading. You have teams and hierarchies that exist. So for example, like I was on a team, there were certain like VIP people in my chat. It was this goal to bring as many people into the chat as possible and build community. And we did things like creating merch, all that sort of stuff, these community building tactics that I think just, equipped us pretty well.
How rich would you be right now if you could have actually done play to earn Counter-Strike in the same way that exists on, say, Axie Infinity or these games that we're seeing in development now? If those skins that you had won had real world value and utility?
I mean, richer than I am maybe today, you know, I think it's one of those things where if you log on to a video game, you don't want to see how long you've played. You know, sometimes some video games is like, you've been playing for 128 days. And, you know, think in the future, you'll look at that as like a badge of honor because, you know, you'll see how many digital assets, you know, what real life consequences of earning those digital assets. But yeah, I mean, back in the day, we were just earning it for fun, which is cool too. But I still think that there's a place for, you know, play to earn as well.
Yeah, but my feeling is that with play to earn, we're going to have a legitimate transfer of wealth to talented teenagers who are very good at video games.
Yeah, I think so. I think I'm excited about the next wave of play to earn games. You know, I think the play to earn games today are early and really early. I'm sure you've played around with some of them. And I'm sure some of the people in the audience have too. But I think I'm excited for the day when we get a Counter-Strike level game, but it's play to earn, and we're just not there yet.
I agree, but I think, that I guess you can take the glass half full or glass half empty approach with that. I mean, Axie Infinity, I always joke, it's sort of like playing with a Tamagotchi or something, right? And in the 90s, it's the earliest iteration of a game. There's nothing particularly great about the game, but because you can make money in it, people are finding a way and they're spending their lives doing it. So you sort of made the exact point I always make. Imagine if that's like Fortnite, right? And it's actually entertaining to play and you would want to spend your time doing it. It's incredible the potential for earning there.
Yeah, exactly. And I mean, it's so obvious we're going in this direction. It's interesting to see the backlash, though, this recent backlash of gamers around NFTs. And I'm curious, I'm sure you've seen what happened with Ubisoft when they kind of put out this video that they said that they're going to build some stuff on Tezos. And then there was this massive, like, I don't know, 25,000 people disliked the YouTube video in like a day. Where do you think that's coming from? That sort of resistance to NFTs from some of the bigger gaming companies?
I'm not quite sure. Maybe it's because it's the centralized versus decentralized argument. The same people who would love to live in the metaverse, in the sandbox or Decentraland, that would never spend their time in, Facebook's metaverse. And maybe it feels like it's a cash grab from those bigger companies, but I can't tell you exactly why there's that feeling. But I was going to ask you something very similar, which is Web3 itself has sort of become a 4-letter word, right? Amongst certain communities. So why do you think that there's sort of that strange bipolarity between absolute hate and love for the concepts of what's potentially coming?
There's this really good Andy Warhol quote I like around Studio 54, which is Studio 54 is a dictatorship at the door, but a democracy on the dance floor. And that's what I really think Web3 is in some ways. And explain that a little bit. So yes, Web3, the beauty about Web3 is it's community-based. You can be global. You can buy into it. You can contribute to a community. But what's happened is some of these communities have, you look at Cool Cats, for example, that NFT community, I think floor price is, 50 grand. You look at Gary Vee's project, the floor price is 50 grand. Some of these DAOs are getting really popular and it's hard to, get noticed. So I think a lot of people, outside the ecosystem have seen their friends get wealthy from this whole rush. And they honestly just, I think a lot of people feel like they're just out of it. And I think we as like leaders in the Web3 space need to do, well, I'll speak for myself. I think I want to do a better job at being more open to people who want to come in, teach them, provide more education, because it really doesn't need to be like an us versus them situation. Like I want it to be, if it's us versus them, it's us versus the big platforms.
Right.
It's not like, the internet users against each other.
Yeah, it's interesting because that implies that people feel like they're already late and they've missed it. Right. And which, by the way, in crypto, I think is everyone's feeling at whatever point they come in. Right. I came in 2016 and bought Bitcoin for the first time. And I'm so mad that I didn't buy it in 2013. Those guys were mad they didn't buy it in 2010 and so on and so forth. But DAOs, NFTs, metaverse, I mean, we're in like the first 1% of the first percent of the first inning. Right. So why would people feel like they're already late and already be hating on this when there's plenty of time for them to start engaging with it?
I think it reminds me, I think in 2004, I went to my first Fish show, Fish the band, and in Saratoga Springs, New York, in upstate New York. And I drove there, I get there and I get to the campsite and the vibe was basically like, Fish is done. Like, you missed Fish. I'm like, like it's like 50% of the people were just like, oh, back in 99 and 98, 97, this show in Vermont, like, and I felt bad initially a little bit because I was like, wow, am I getting like the Disney World version of Fish? Like, is this not the real version of Fish? And I think that's the same, thing that people feel today with Web3, which is like, there's, crypto is in the news every single day on major publications. And I think because of that, and just all the stories that come out of it, people just feel like it's 2004, fish. And I think like now I spoke to some, fish heads actually over the last couple of weeks, and now they're talking about how 2004 was like the good old days. So super interesting. That's just human nature. I don't blame them for thinking that way.
Yeah, it is human nature. I mean, I'm 45 years old and I'm already the old man who talks about how good music was when I was in high school and college and how bad it is now, right? And our parents did the exact same thing, and that will exist into perpetuity, I would imagine. The other side of Web3 being sort of a four-letter word, or being controversial, is the VC side, right? That Jack has been sort of railing about on Twitter. Elon Musk has been a bit dismissive of it, but basically the idea that venture capital is making all the money on Web3, and that the last sort of drops are falling into retail's mouth, where we can earn a bit of a profit after the VCs have already gotten fat. Do you think that that's a fair assessment?
It couldn't be more unfair as an assessment. Like I think it's too bad that narrative is being spread, because it's just certainly like it's not true. I think Balaji has like put out some of the data around it, and yeah, I think like what we need to do is just sort of approach these stories and narratives and just put out the data. Like it's just certainly not true. Do VCs make money on protocols like Solana, where they got in really early? Like absolutely, but at the same time, like they took a lot of risk when people weren't willing to put the money in, and it's still a largely community-owned protocol, and yeah, I don't think we would be, and Solana would be where it is today without the help of some of those VCs.
Yeah, I mean, I've had Kyle Samani on the show very, very recently, and I know the guys at Multicoin. They led the first 3 rounds on Solana, and they're still holding, right? Like
exactly.
Not to their credit. Like you can be mad that they've quote unquote made all the money, but they could have sold out and dumped at any point along the way and had real conviction from the very beginning. You're talking about people who bought this thing at like 5 cents and 20 cents.
Exactly. That's what kills me about the whole thing, is that they're literally holding it. Like they're literally holding it. If anything, it makes sense to have some VC capital in some of these protocols, because they're the VCs are used to getting returned 7 to 10 years later. So you don't want flippers, you don't want a ton of volatility. Like sell some, sell 5-10% to some great VCs like Multicoin, and but I wouldn't sell 75%, right? I think
it's also the whole argument. You touched on the risk. Obviously, it's also dismissive of like the fact that 9 out of the 10 things you might invest in could go to zero, right? And you could lose, and you could lose all your money. The other side of it, I think, that is totally missed by some of the people who are making those arguments. First of all, there's a few. One is that that's not something that's inherent to Web3. It's just the way money is raised because of who's allowed to invest in things in the United States, right? I mean, there's accreditation laws. The little guy can't invest in anything. So this isn't a problem with venture capital in Web3. It's a problem with if a company wants to raise money in any sector, they can only go raise it from venture capital, right?
Yeah, exactly. And put yourselves in the shoes of the founder and the founding team. Like they have this vision, they want to see this being built. For us to say like, poo-poo, like you can't go to VCs and VCs are bad completely, I think is indicative of, how the media is today, where it's very like polarizing, one size versus, Gary Vee said on our podcast, where it happens, he said something really, I like this quote. He said, it's very much fingers, not thumbs. People against people, and not like being positive. And I think that's what we're seeing a lot of.
Yeah, it makes a lot of sense. The other part that really drives me nuts is that you have this idea that VCs are the ones who are like getting fat and making all the money, which is utterly dismissive of the actual benefits of these platforms to your average person, right? I mean, I use Google every day. I don't care who got rich by being an early investor in Google. I just care that Google improves my life, right? It makes access to information easier. So like the whole point here is that Web3 or whatever these innovations are an improvement in the everyday lives of the people that use them, which has literally nothing to do with who funded it.
Yes, and I completely agree. And to me, what I care about is, are these communities safe communities, inclusive communities? Are we, reducing the environmental impact of some of these transactions? How do we think about security and privacy, and making sure that that's super, simple, and how do we just, yeah, how do we make it easier for people to onboard to some of these communities, protocols, etc.? That's what I care about, how we get there, in terms of like, do VCs own 30% or 20% or 15% or 5%? I don't think is the major problem right now.
Yeah, I agree. So zooming out, taking a sort of a wide view on it, why does Web3 matter? Where is Web3 improving our lives on a day-to-day basis, or where will it when it really comes to fruition?
So yeah, we talked a little bit about where I come from. So I grew up like one of those nerds. I can get the vibe that you also nerded out on some stuff because you're into music, I know for a fact. And I'm one of those people that like, I'll get really into like Colombian coffee and this like particular like region, and then like I'll go into the subreddit and like I'll know everything about it, and or a particular car, and I just like get really deep into it. And my whole life I've been building internet communities, starting just like not as a not to make a living, but as just because I love bringing people together and I love nerding out. I think what, if today, I think what excites me about Web3 is, what we can do is a few things, to kind of supercharge what I had been doing for the last 15 or 17 years, which is like incentivizing people, to contribute, and coordinate, which is really difficult, if you have hundreds of thousands, tens of thousands of people. Getting people to coordinate and getting them to contribute and incentivizing them is, one of the hardest problems of our day. And if we can get people to do good things, solve the climate crisis, get plastic out of water, stick it to banks and create like great products, financial products for people. I believe that that's where the internet should have been in the 90s. And so I'm excited that we're finally getting there. And I just think that we're just scratching the surface of kind of what that's going to be.
So for you as a community builder, like you said, that's literally what you do for a living. How do you identify, I guess, the projects and ideas that are worthy of a good community and decide that that's where you want to build? Because I think with anything like the dot-com bubble of the 90s or whatever, you sort of have this flood of entrepreneurs, innovators, and 95% of them are going to be bad ideas that fail, right? Which is totally fine when people come to a space and try to innovate. And then you sort of have that 5% that, rise out of it and become the most important companies of that genre or of that time. So how do you choose the right idea where you're going to focus on building that community when there's so many options?
The mistake a lot of entrepreneurs, Web3 entrepreneurs, make is they'll go build a community. They'll go spend a lot of money building that, product out. Maybe it's an NFT community, maybe it's a social token, whatever. They launch it and they aren't able to sustain a healthy, thriving community. I believe that, if you want to start a Web3 community, the best place to start is to start a Web2 community. So like, go start like a Discord, go start a WhatsApp, go start like an iMessage group, like really small, and go like hone in on the mission and the raison d'etre of what you're doing. If you can't start a successful Web2 community, that brings together around a mission, even if it's in Web2 land, like even if it's just a Discord with no collab land, it's not checking your wallet, or even if it's just like a WhatsApp, then you're probably not going to make it in Web3 land. So what I love to do is, I love to pick untapped communities that have a strong reason to coordinate and come together, and then create, an aesthetic, a mission, a brand that speaks to them. My hack often is just starting by a Web2 community first.
That makes sense. I mean, it's very, very clear that Discord and Telegram groups and such are still wildly popular and useful. And certainly I can speak for the crypto space, right? That's where everybody is interacting. So it would make sense, I guess, to start there. But when you start, say, an NFT community around one of these sort of JPEG projects, I've always been sort of dismissive or at least skeptical of a lot of them. I understand why a CryptoPunk or a Bored Ape has value, but I don't understand why random alliterative animal and adjective pudgy penguin or lazy lion or dismissive Dalmatian or whatever. I don't understand why those have value or why those communities are so passionate about those projects.
Well, I think their passion, not speaking to those particular communities, but
right,
specifically, but I think there's tons of projects that the only thing that's bringing them together is making money.
Price appreciation. Yeah.
I remember, exactly. I remember my dad telling me this, and I don't know if it's something that he learned or it's like a quote, but I remember him saying, when it rains, when it's sunny, they give you an umbrella, and when it rains, they take the umbrella away.
Yeah, that's exactly accurate.
And that's how I feel, as soon as people, with some of these NFT communities, as soon as the price appreciation, as soon as they stop going up in value, all of a sudden, like the reason to be there is no longer, and it's going to be like a graveyard of animals. It's going to be, and like Noah's Ark is only going to be a few animals.
Everybody in cryptocurrency already knows about Hedera Hashgraph. It's one of the fastest, most secure, and trusted networks on the planet. But what they might not know about is the HBAR Foundation. With a budget of $2.5 billion already, they are funding entrepreneurs and projects that want to build on their blockchain and build within the ecosystem. Absolutely incredible. And they're not only giving them funding, they're actually helping them to develop it and then to get the word out as well. You guys should check out the HBAR Foundation and what Hedera Hashgraph is doing. You can do all of that at thewolfofallstreets.link/HBAR. That is thewolfofallstreets.link/HBAR. Do it now. Have you ever been trading crypto and during bouts of high volatility had your exchange go completely offline or seen the order books go thin and have absolutely no liquidity for your trade? I know that you have. It's happened to every single crypto trader, but it's not an issue anymore thanks to Bullish. Bullish is a powerful new exchange for digital assets that offers deep liquidity, automated market making, and industry-leading security. Combining the innovations of DeFi with the regulated environment of traditional finance, Bullish empowers users to trade with confidence across variable market conditions while secure in a regulated environment that's backed by multi-billion-dollar liquidity contributions from the Bullish treasury. Follow @Bullish on Twitter or visit thewolfofallstreets.link/bullish to learn more. Not investment advice. Digital assets and cryptocurrencies are high-risk products. Consult your professional advisor before dealing in them. Bullish's services are available in select locations only and not to U.S. persons. Visit thewolfofallstreets.link/bullish for important information and risk warnings. Yeah, not two of every single project that ever existed. And that's exactly my take on it. And people get pretty angry at me when I say that sometimes. When I say, listen, the only reason you're passionate about this asset or this community is because the price keeps going up. And you're not going to be your turtle, and your turtle's not going to be you, and you're not going to sleep with a picture of it at night if it goes to zero. You're going to move on to something else where you can make money, right? And you're going to probably feel pretty embarrassed. But so how do you build a community that is not there for price appreciation, even if they believe that they're not, by the way, and is genuinely there for a purpose, even if, the price went down?
Yeah, I think there's a few things that, people should look into. The first is, don't do any cookie cutter projects, period. Like, don't just take a zebra and make it a raccoon, because the staying power is not very good there. If you're going to create an NFT project, think about, what am I adding to the space, not subtracting. So that's the first thing. So, and I'll give an example of that. Like, let's just say, with Dom, who created the Loot project, co-founder of Vine, like, that whole project, which is like, for those of you who don't know, it's like black background and like white text, like that, was completely new. No one had ever done an artist like that. And the fact that these they call them loot bags, there's basically text of like different RPG role-playing game character stuff, so like slippers and gauntlets and stuff like that, and people are actually building games on top of it. Like, that concept was new. He added something to the space. So think about, how do you add something to the space is the number one thing. And the second thing would be, before you create something, think about what community you're going after. So like, I don't know how this project in particular is doing, and this isn't advice or anything like that, not financial advice, but like crypto dads, like that's a community, like you're a crypto dad. So you might have something in common with these other dads. And if they actually, go and create a roadmap around bringing you guys together, and maybe like partnering with like Linkstao, who's buying a golf course and doing all these other things, like that's a project that I can get behind. So yeah, those two things.
Yeah, I think that's incredibly cool and accurate. But I guess, to play devil's advocate, like, I don't know, I've been finding people that I like with no financial incentive my entire life, and have groups of friends, and we go play golf without having to have like, crypto or I guess a community behind it. So I guess, like, what really takes it from like me and my buddies to, I want to go meet 500 strangers at a golf course that we just bought together with a DAO and play golf,
There has to be some, deep utility that's bringing you together. Like someone asked me the other day, they were like, I'm sure you get this too, like, oh, just a JPEG, it's just a JPEG. And the, analogy I was using is like, the other day I was at Soho House in Miami, and Soho House, which is like, I don't know, $300, $400, $500 a month, is just a piece of plastic if you think about it. But, it's a card that gets you into a space, but it's the space and the experience of the space, which, makes them a multi-billion-dollar company. So I think that the only projects that are going to survive are the projects that have that deep utility, have that space, and the projects that the only reason, like, community isn't enough. There needs to be utility, to your point. I think community plus utility plus a strong mission are some of the ingredients for making a great project.
Right. As I mentioned at the beginning, you've done this for some of the biggest and most successful communities that exist, but then you decided to start your own company, correct? Late Checkout. So what exactly are you guys doing, and why did you decide to do that when obviously you could continue on the path you were on before?
Honestly, because it's fun. I'm optimizing for fun. Late Checkout is a thesis-driven holding company that believes community-based products outperform non-community-based products. And we've set up 3 business units. We have a fund that invests and acquires community-based products. We have a studio that incubates our own, NFT projects, Web3 project, community-based products. And then we have an agency, which is one of the leading, community-first, community-based products, Web3 agencies in the world. And we help some of these brands transition to this new world we live in. And, I think there's tons of brands that have such incredible IP that if we, in a non-cash grabby way, actually create utility, community, mission, there's tons of ways that we can include digital assets to leverage and unleash some of that IP.
Speaking of IP, one of the biggest companies in the world, Walmart, right, just announced, I believe they filed 7 applications, this massive push towards metaverse, NFTs, and even potentially like a Walmart coin, I guess, their own cryptocurrency. Is it realistic that the biggest brands in the world are going to be able to leverage this properly without it looking like a cash grab, as you just said? Will you walk into Walmart in the metaverse somewhere and have some replicated shopping experience and go buy your goods there? Or is that not what people want out of Web3?
I don't think people want to like throw, and initially at least, I don't, there's that video of like I think a lot of us have seen it of like picking wine. Maybe it's at a Walmart and it's like, honestly, no, like I think like we're not there yet. And as much as like Zuck, et cetera, are trying to push that vision, um, I just don't think we're there yet. And I think that the most successful brands that go from Web 2 to Web 3 are the ones that are going to do progressive decentralization, do progressive Web 3, and just do it slowly. Like just like I was having a conversation this morning with a Fortune 100 brand, and they have this whole idea of doing like putting their whole loyalty program on crypto and doing 100,000 NFT project and like spending $20 million in TV ads. And I was just like, how about you just get do $1 of on-chain revenue? How about you just reward 50 of your biggest customers and start there? And I think what's going to end up happening is, unfortunately, a lot of these brands are going to look like it's cash grab, and it's going to actually make the space look not favorable. But I do think you're going to see some brands who are going to do a really elegant and powerful ways to reward customers. And it's probably over you're going to start seeing this over the next 12 to 18 months.
Are there any brands, large brands, not communities that are being built in Web3, but people going from, Web2 to Web3, or even just mainstream, like size of Walmart or luxury brands, who you think are doing it in an elegant way already and could win?
I mean, it's really early. I think like what I like about the McDonald's of the world is like they had a small project. They were McRibs, I think NFTs, and what I like about that is it's pure. It's a really pure. Like McRib is kind of like the most hilarious McDonald's thing, right? Like people
Shamrock
saw that
shakes and McRibs, right?
Exactly. Exactly. So like that's funny and that's noteworthy, and I love that. Had a conversation with Billy, who's the co-founder of Dogecoin, the other day, and he was saying how we're just talking about why Dogecoin works, and it worked, and he was just basically like, he basically said, I understand the memes and I built the memes and I do pure memes. And because of that purity, my memes work. So I think the brands that keep it pure for a particular target audience are the ones that are going to win. And there's going to be some cringe stuff that's going to come out, unfortunately.
That's interesting, because it's almost like the brand has to not take itself seriously and do something slightly self-deprecating that's a meme to be able to exist in this Web3 world where memes rule. That's not going to align with 99% of the people that try.
I ran an agency in 2007 or something, when it was the shift from web to social. And we talked to a lot of brands who were thinking about the move to social, like creating a Facebook page, creating like a blog with comments, live streaming, all these things. And the biggest brands at the time, like we often forget, but they were like, oh my God, having our community, like giving them the ability to like talk back to us, they're going to say bad things. We can't do this. Like we take it all for granted. We take it all for granted. And certain brands did a good job. Certain brands did an okay job, and certain brands didn't even try until later. But I think, the lesson I have for that is, in Web3 land, I think the brands that really, really didn't take themselves too seriously, understood how to create healthy conversation, but poke fun, think about virality, bringing in the community. I think those are the ones that won. And I think the same thing is going to be true. We can basically apply a lot of those lessons from social to Web3.
Right. And I mean, if you look at the biggest companies in the world in the mid 90s or even the early 2000s, like none of them are there anymore. Right. They sort of, the great analogy of like, they were the blockbusters and then Netflix came out. They've been sort of replaced. They weren't ready for mobile. They weren't ready for Web 2. Are we seeing that level of paradigm shift here, do you think, where even, the biggest, Facebook's obviously already identified this as the move that they need to make, whether successful or not. do you think that even the Googles and the other companies that are the biggest in Web 2 could now find themselves obsolete with Web 3 competitors coming in?
Yes. And I know this because some of those Web 2 companies have reached out to me and are like very scared. And it's like a tone of like, what do we do? You know, we felt so confident. We understood the playbook. There was a playbook, and now what is the playbook?
But like even a year, like 6 months ago, it's
yes.
not, this happened so fast.
Yeah. And that's, you know, not cool if you're, you know, VP product at one of, you know, or chief product officer or CEO even of some of these companies. You need to have a plan.
Yeah. So it seems like these Walmarts of the world, and a lot of these are completely reactive to Facebook's move. That's my feeling. I don't know if that's accurate, but I feel like Facebook, being one of the biggest companies in the world, had this surprise move to rebrand to Meta and go all in on the metaverse. And now you just have a bunch of people trying to figure out a way to do something and not get fired. Exactly. I need to go to my boss. I need to go to my boss with a Web3 plan, whatever this Web3 thing is, and we got to make it happen. That's how it feels to me.
But wasn't that the same with like, I need to get to my boss with, you know, mobile, social,
a social
web
plan. Yeah. Sure.
Yeah, exactly.
Yeah. But most of those failed. And I'm curious if you have thoughts then on what the next iteration of social media is, because social media is largely dominates Web 2, right? I don't know if it feels that way. You know, the Twitter, Facebook, Instagram, TikToks, are they going to also have to somehow find a Web3 plan? Like, what's the next iteration of social?
I mean, I think that the large platforms will eventually surrender to Web3 in some capacity or another. Either they create protocols that people, you know, build upon, or they, you know, ultimately get extinct. I'm not talking about 5 years from now. I'm talking about like, it's probably going to take a long time because network effects in all businesses actually are so strong. But I believe that you know, a lot of these large platforms are thinking about integrating Web3 and making it you know, they're taking baby steps. Let's see if they actually take leaps.
Right. But, you know, I often make the hot take that MySpace was the greatest social media platform of all time. And Friendster before that was actually kind of amazing. And people forget that even existed. But I mean, MySpace died hard and fast, right? And it was dominant. I mean, MySpace seemed to rule the entire world, and a year later was non-existent, right? Could that happen?
I started a social app in 2016. It was like a Discord competitor, focused really on college campuses, and we raised a few $1 million. But it was really like the nuclear winter of social. Like, it really, no one was raising money for or doing much in terms of competing with the holy trinity at the time, you know, Facebook and Snap and Google and you know, in some respects. So I think that if you're listening to this and you're thinking about do I create a consumer social Web3 product? I think like now is the time, you know, like there's so much funding for it. There's so much action for it. There's a lot of demand. There's some cool stuff coming out. I invested in a company called MetaLink. I don't know if you've seen that, but it's an NFT. It's basically like a Web3 version of Discord natively. And there's a bunch of products. You know, Rainbow is doing some cool stuff and a little bit in terms of social. But yeah, I think good time to be building social. You know, I think the thing to think about if you're building it is, how do you create something that isn't just, you know, Facebook is just going to, you know, grab that feature like NFT verification, like that's going to be table stakes, right? You have to be thinking 5 years, 10 years ahead.
Yeah, I remember having an argument with my friends, and my wife's a social media expert. And I was like, Snapchat has killed Instagram. Instagram's dead. And then like 5 days later, stories, right? Or like Clubhouse, so amazing. Nope, Twitter's going to crush that in 5 minutes, right? To your point is that if you just create something that could be a feature on a larger platform, you're toast. But maybe then the move isn't to try to reinvent the wheel, obviously, but to do something more decentralized. I've heard a lot of CEOs starting to talk about decentralized social media. nobody's gotten very specific as to what that looks like. But even you said, the companies moving to Web3 that decentralize slowly will probably win. Walmart's not going to decentralize, right? And
Yeah.
so is there going to be a huge wave of pushback against more centralized platforms in favor of the few that may be successful at decentralization?
Yes, there's going to be more and more pushback, especially as, I believe there's going to be more and more hacks, in these, big platforms like Facebook. So, you'll lose some of your data, or it'll show up on the internet and you'll be upset. And because of that, you'll look, a lot of people will look for decentralized versions of these products. So I think that's a trend that's definitely happening. I think we've seen a lot of decentralized Twitters, decentralized Facebook, like basically decentralized versions of a lot of these social products over the last maybe even 5 years, maybe even more now. And I don't think the decentralized version of Twitter is the thing that's going to win, basically. I think that it needs to be decentralized, but you also need to come up with a new format.
It has to be different.
Yeah, it has to be different. Like Clubhouse was cool because it was like, at the time, it was like new format. This is cool. This is fun. I can't get this anywhere else. We need that plus decentralization. That is what's going to win.
Yeah, it reminds me of you rebrand your company to Long Island Blockchain Iced Tea, and all of a sudden it goes up because you put crypto in it when the name crypto, right? So maybe decentralization, the first iterations will be people attempting to decentralize everything without innovating really at all, right?
Exactly.
And I think that's actually what a lot of DAOs look like in their sort of infancy right now. I mean, I know that you're focused on that space, but let's do this, but democratically, right? And right. I don't think that that's what's going to win. I'm curious to hear your opinion.
Yeah, no, I completely agree. It's not going to win, and I think we're already starting to see it. We're starting to see it, and I think what's cool about the state of where we are with Web3 product building, Web3 community building, Web3 growth and user acquisition is we may have not created the playbook yet, but I think we've created a few pages in the playbook at least. Like we're starting to write the playbook. So it's great and it's exciting because it gives entrepreneurs a reference point, which also allows for, in my opinion, better products to build.
That makes sense. So in a perfect world, let's say that there's a Web3 sort of revolution, and let's pretend that the blockchains underlying can actually scale to the point of mainstream adoption, because they can't right now. Let's pretend that, though. What does the world look like in 5 years, ideally, if you've built it?
In 5 years, you own your content first and foremost. The relationship you have with the people you care about and the brands you care about and the communities that matter to you are deeper, and you have a deeper place to foster those connections. You work 3 to 4 jobs realistically. You do some bounties for some DAOs, you contribute here, you contribute there, while you're waiting in line for coffee, you fill your gap time by playing, a mobile play to earn game. And I think more people are artists, more people are creators. And I think it starts younger. I think we're going to see 13-year-olds, 12-year-olds, 11-year-olds, 15-year-olds, making serious bank, because they just understand that world, and they understand the trends and the tools for actually going and creating a lot of these communities and products are going to be no code. So they'll be able to just do it and put it together like a Lego set.
So you think the next generation skips college and jobs? I mean, obviously people are going to need to be doctors and lawyers, but right. Your average person who was maybe like myself, going to college to find themselves and get a well-rounded liberal arts education and figure it out. Maybe you've figured it out already when you're 13.
Yeah, I think listen, there's always the cool part about college is the whole social experience, social experience, or to your point, like if you do want to like be a doctor or lawyer. But I think um the what is out there on the internet, not just in terms of, in Web 2 land, it was just like information. In Web 3 land, it's about like you can really like make a livelihood. I think is just going to be so attractive that it's going to be hard for it's going to be hard to go to school when you're 18. Like, good luck competing with that, you
Right.
know?
Yeah. Yeah. Exactly. Like, let me go pay $1 million probably by then to like get an Ivy League education, or go get really good at a video game and make millions of dollars.
Yeah.
Seems
I
like
mean,
a teenager is going to have a pretty clear choice there if they can do it.
totally. And, I think us as parents, I think will understand it. I mean, I certainly will. I dropped out of college. I think did you finish?
I finished. Yeah, I finished. I didn't do anything with it, but I finished.
You finished. I mean, I'm not going to ask you for your GPA or anything, but
Low threes ish. You know,
I mean, above.
not stellar, but I made it. You know,
Okay.
I could have tried harder. But like, I was, and I was there to, I never intended to use my GPA to get a job and to become a lawyer, get into graduate school. I knew kind of always that I was going to do music or create something or find my own way. So I wasn't that passionate about the school side of it.
For me, I grew up in Montreal, Canada, and if you're not basically the history there is most of the big jobs when I grew up moved to Toronto from Montreal. And so when I grew up, I knew that a degree wasn't going to get me a job because there were no jobs. There was very little jobs. So growing up, I was just like, okay, I'm just going to spend a lot of time on the internet. Like the internet is my access. And I think now you have access, but you also have real livelihood. And the tools that all of us are going to have, not just children, but also like I'm really interested in like retirees.
Yeah.
Like,
I mean, anyone with time and motivation will be able to find a way, I believe. Yeah. And so, yeah, it's going to be a completely new world. Before we get done, I want to also ask about the podcast that you do with my good friend, Sahil Bloom. You guys started that recently. Tell me why you decided to do that and how that's going.
Well, first of all, thanks for coming on. We're throwing, I think your episode's coming out soon. So for those listening, maybe you subscribe to our YouTube channel, Where It Happens, youtube.com/where it happens, and you could subscribe to see your favorite Scott on there. What up?
I'm the best Scott. Yeah.
The best Scott. The best Scott. Exactly. So, we felt a lot of the podcasts today were very like kind of one way. It was like one way to the audience. So we created a Discord. There's about 3,500, 4,000 people in it. And we basically just hang out with our Discord. We ask them questions. We interact. We talk about like NFTs. We talk about Web3. We talk about building. And then we take some of those ideas and then we invite our guests like you to hang out and chat on video mostly. And so far, so good.
Yeah, I love doing it. It was a lot of fun, and definitely made me even rethink the way that I do my show. I was like, I need to be on a couch in Miami, and this needs to be much more casual. And for
well,
sure.
I like your vibe and how like your frequency of how much you do it. Because that makes me, I'm just like an audience member. Like I feel connected to you in that sense.
I love that. I definitely feel like this is the greatest job in the world, and I would do it every day if I could. You get to call someone smarter than you who has a deep knowledge of a topic, and they'll spend an hour with you. That you can't, speaking of college, couldn't pay for that if your life depended on it, right? You get a free college course in whatever topic you want for an hour anytime. To me, that's the most valuable experience you could possibly have. So I thank you for coming on. Where can people follow you, check out the podcast, check out what you're doing after this?
Twitter, I guess, at Greg Isenberg is my Twitter. And then the pod, just go to trwh.com, our website, or you can go to YouTube. Like I said, youtube.com/ I think it's Where It Happens. But yeah, you'll see it around.
Amazing. Well, I can't wait to live in the metaverse with you and hang out there and see what we can build.
Totally. We'll just have to recreate Florida in the metaverse.
It's inevitable, man. Thank you once again for coming on.
Thanks, man. I appreciate it.